Welcome, boys. Just going to show you a quick little tutorial of some tools I've been talking about. Um, right now we're looking at my 49-inch monitor, but I have this flex grid minimized down to like a 24-inch side. So usually it's, something like that, like much spread out, but I'm making it a little more compact so that, you know, it's easier for a majority of people to view it. So couple things I've added. One, this middle row. This is like my newest flex grid that I've been using. I have RSI here in the middle, DMI. This is a cumulative tick study and various labels. This is the 10x one that you guys are probably familiar with by now. It's just the status of the trend of all the time frames. Always want to keep in mind the longer term trend usually is the one to prevail. So if you have, 1 hour, 2 hour, daily, weekly, and monthly all green, well, look out for bounce opportunities to go long. Now that sort of applies to more of a couple day hold or so, but it is very telling when you start to see 1 turn red, 2 turn red, 3 turn red, 4, 5, 10, 15, so on and etc. You can kind of gauge how serious the trend is, or how much momentum it has. And these are the top 3 weighted ETFs that Piper had shared. Um, haven't quite utilized them yet, but I see its appeal. So essentially, SPY and any other big ETF can't really move unless these are moving big. Since majority of stocks are held within these 3 ETFs, if these 3 ETFs aren't doing good, then it stands to reason that the market wouldn't be either. And then here's just some price change labels of the FANG type stops or stocks or Fab 7 or whatever they call it these days, but the big caps, Microsoft, Google, Amazon, Apple, all those good guys. But whole reason I was, oh, and also a 5-minute MACD up here, up on the top left. So the only reason why I put them all in the middle here is to kind of just save space for my charts. I do a lot of technical analysis, so when you have indicators and your chart starts looking like this, I just can't stand it. I want volume on my chart, which is down here, and that's it. Everything else I can see quickly at a glance. This is an RSI study that I have had for years and works great. It's got buy and sell signals, but just keep in mind these, just like any other indicator, these are just recommendations um, based on RSI strength. If it hits a new low, it'll tell you to buy. If it hits a new high, it'll tell you to sell it. So I'll hold my cursor here at this dip. And if you look at this RSI chart, there was a buy arrow right on that dip, like down to the second, because that's the lowest that RSI had been so far today. And it suggested we buy there, and boom, shot straight up. Also, at that time, DMI was nice and wide, and ADX was climbing, which is that blue line. And here is the tick cumulative study. Now, this is a great study when tick is moving big. If you'll notice, we had a sell signal up here, which was right about here, and it fell all the way down. Then later on to at 1346 time mark, price has gone up since we got that buy signal in tick. I also still do use the other tick, but I like this as a study. It's just you play the crossovers. I recently added arrows to every crossover. but you can kind of suss out the good ones versus the bad ones. And by doing so is just when the lines are real far apart, it's a good strong signal. Like this sell here at 13.18, lines got nice and spread apart. But when you see signal like this, buy, sell, buy, sell, buy, sell, buy, sell, that's just chop. You're not gonna be able to do anything with that. It signals like this one. And as I'm going through this tick, watch the cursor on the left or the vertical and horizontal lines. Our buy signal was here, and price went up from there. We had a sell signal here, right here, and price went down from there. Buy signal here, and price went up from there. So you can see, I'm not going to go into huge depth, but you can see its potential. And this is interesting because 15-minute TMO just turned as we got this nice big bounce. So that could be interesting. I wish it was coming off of oversold. That would be even better. But all right. So back to the real reason of this video, which is to show you a couple new tools I've been using. One is it's called the Chande VWAP, which is this red and green one. Chande VWAP. It's based on deviations. It's based on a bunch of different things, and I suggest you look through the code to kind of familiarize yourself with it. But it's a very interesting study. It's just a different take on volume weighted average price, um, and comes up with a little bit different of a reading than traditional VWAP. But what I have found is by adding this Chande VWAP and this is a whole moving average, which I've talked about this in length before, and I really don't want this to be like a big technical video. I think you should all do the research on your own time, so that this isn't just me blabbing on, geeking out about uh, technical indicators. But a whole moving average was first implemented or invented in the first place to prevent one thing, and that's moving averages are based on past performance. So it's a lagging indicator by nature. It's kind of what I always like to say is moving averages kind of fit within that realm of logic where objects that are in motion tend to stay in motion. And that's true because a moving average is data that has happened. Um, so if you have a 9 EMA just pointing straight up at the sky, that's based on what's happened 9 bars ago. So it's not guaranteed to happen. It's just what has happened. And a whole moving average was created to kind of get away from that mindset, and it actually is more forward thinking. So it's not a lagging indicator, so to speak. And it's got a um, plethora of other studies involved with it. So that's another interesting one I'd like you to check out whenever possible. But just consider these two lines just for what they are. They're just two lines, just for now, until you start learning it more and more. Now, what this one will do, which is the whole moving average, when it's bullish, it'll be blue. When it's bearish, it'll turn red and bullish. And every time it does so and it fits within the parameters, it'll print a long or short signal. So it turned red up here. I know it's not printed right on the line. That's by design. Um, it's printed, with the candles. So it's way up here, but the signal's down here. So that's how that whole moving average um, is displayed. And the Shande, same thing. Um, red bearish, green bullish, but this is actually a 50 length, so it's pretty long. And I put it at 50. I think After doing some testing, I found it's been pretty good with 50, so I keep it at 50. Now, all you have to do, don't even really mind these signals, short or long, for now. But just if you get price to cross above both lines, the hull and the Chande VWAP, it's a good signal to go long. If you get across below both lines, it's a good sign to go short. So for instance, we opened here, 930, sold off. Both of our lines are right here. We crossed the whole moving average. Then we crossed and closed above the Chande. And by what I'm telling you right now, that would be considered a buy signal. And sure enough, it took way off, which is this is a huge move for directional options. And then came back down, it tested this whole moving average, but didn't close below it. I mean, very, very close, but it didn't, and bounced right back up. So what I've been doing is on if ATR if it's not a good ATR day, I just use this as kind of like I'm always scalping. I'm not just waiting around for the ATR signals, just full disclosure. I mean, I it's my bread and butter, but I'm it's I just have more opportunities to trade on than just wait on those. And if I think that they're easy to understand, I'll share them whenever I can. And I thought this one was relatively easy to pick up. That's all it is. Just think. Don't overcomplicate it. Don't think about the colors of the lines. Doesn't matter. If price crosses above both lines, doesn't matter which is on top, which is on bottom, it's a good signal. Or below. Okay. We crossed it. We crossed both lines here, good signal. We popped down. We didn't cross below the second line. We only crossed below one. So that would not be a short signal. And again, we crossed back above it. And what you can even do is use, okay, we broke above the whole moving average, then we broke above the VWAP, we moved up. What you could do is a close below the lowest line is your stop. So we would have not been stopped out because we got the cross above both lines. It starts heading back down, but actually tests this whole moving average, but does not close below. So we would still be in the trade. Then kind of bounces again. We get the double cross above both lines, and it keeps going. Look, we could have been stopped out here because it almost broke below our lowest line, but it didn't, so we stayed in and would have crushed it. Now, same thing here. This is a short trade because we got a cross below. Like, let's say this is real time. You can't see any of this. Like where my gray box is, pretend you can't see it. We cross below this whole moving average. We're now below it. We're like, okay, now let's wait to cross below the VWAP. And if it does, we're going to go short. Well, crosses below and closes below. So we take it. And then. That's perfect. And then, if you wanted, you can use this line as your stop for your short as well. Then when it goes up, that could be your stop. But in a perfect world, you'd be out with profits by then. Because that's a good move. 20 cents or less. That's all I want in a scalp. If I buy it at 120 a contract, I'm selling it at 140. You can always hold runners. You can always buy it back. But just don't let profits slip away. How many times have you seen, I mean, I don't know how many contracts you trade in, but how many times have you seen plus 30 to 50 bucks? Probably often. But how often do you see plus 350, 400? Not very often. So just keep taking those plus 30s, plus 50s, plus 30, plus 50s, and it adds up. And then you start using more contracts and more contracts. So I'm keeping it simple as possible. Don't even worry about what types of lines or what. It's just two lines. That's it. Doesn't matter which is on top and which is on bottom. So we crossed below this one, and closed below. So we took it, shorted it, took profit. Now we crossed below it, above it. I'm sorry. Now we want to cross above the next line. It does. We could have taken it, and we probably would have been stopped out because that's a difficult move. No, I mean even our ATR was saying buy, but didn't. It was bupkis. But not every signal is going to be perfect. I mean that's the thing you have to understand. Not every signal is going to be perfect. You have to evaluate every other metric you can while keeping it simple to make your educated decisions. But for argument's sake, this did close below the whole moving average and then closed it below again. But this is a big candle. I don't like to trade off big candles because usually a big candle creates a big jump in the opposite direction. Like, big candles bring big knee jerk reactions. I like candles, like this one. Just something like that size, just nothing too crazy. Because if it's going to be big, it's going to have a big knee jerk reaction because it's going to trigger a lot of bids. It could start catching some bids with a big candle like that. So okay, crossed both lines, took loss, stopped out. Then crossed both lines yet again. I mean, the lines are tighter now, but still crossed them both. So we would go long. And this is even saying long because uh, the line went blue. So there, it's above both lines. And again, you could use the lowest line for your stop. You wouldn't have been stopped out here because remember, close on a green candle is up top. So we were close with this red candle, but not with this one. So we even could have kept holding. Wouldn't have been the smartest thing, but here you go. And you could have held all the way up to here because you never crossed that bottom line for your stop. Now that would have been a poorly managed trade because no, you shouldn't hold for 400, 500, 600% gains. That's amazing, and I'd be very happy for you, obviously. But you know, take profits, and it's a lot. You'll lose a lot less often. Let's just say. Now this was from the 19th, so this was last week. Let's go back another day just to kind of check it out. Now the first 30 minutes, they're always going to be tricky. A lot of big orders accumulate overnight. It's going to be jumpy when it first opens. So I exclude the first 30 minutes almost always. Unless there's data that I can somehow comprehend, which is far and few between. I mean, I just let the market speak. I try not to say, "Oh, that's bullish data. I'm fucking going for it." No. Now again, back with this big candle thing. This is a one big candle got us over both lines. And I don't like big candles because of the big knee jerk reactions they bring, which is exactly what happened. Now, if you went long here, you probably would have made some money, but it would have been so fast. You probably would have wanted to hold because of these two great big green candles, thinking it's just going to keep going. So a big candle like that, I like to avoid. But you can always buy it back. So we would have been stopped out, or it would have been negated because of the size of the candle. So we wait for another opportunity, which came here at 10:24. Candle a candle, our 2-minute candle is above both lines. So we could hold and hold. We went long here. A close below the bottom line would have been our stop. We got down that far, but we didn't close down there. We closed all the way up here, as you can tell by the wick. Let me zoom in case it's hard to see, but so we did get below the line, but we didn't close it. So technically, we would still be in the trade and keep going up and up and up. And then probably would have been stopped out here. I mean, that's borderline below, but it would be better than over here. Like you shouldn't, this isn't like the most amazing strategy there is because it's very risky to use a stop like this, but at the same time, it'll also follow price similar to ATR. So it's not like, you buy at 120 and your stop is 110 and all of a sudden it's 170, 180, 190 and your stop's all the way down at 110. No, you want your stop to move up with you as you go. That way when you do get stopped out, if and when, it'll be in profits. So it is good in that sense, but all I'm saying is there's a lot. Just do your research, do your homework, see what you can come up with. But on the surface, it's a cool little scalping trick I've seen. Um, okay, got to close below both lines here. Big candle though, don't love it, but if we took it, would have been profitable. Um, then we bounced up. We got a close above this line. Now all we need is one more. We got it here. We would go long. We'd get all the way up to here, which is again a huge move. And yet again, close below both lines. Down. Same thing here. We get a close above both lines, but that trade is obviously a dud because it goes right back down. But the very next candle, we get a close below both lines, so we could have gone short and rode the bejesus out of that one. So that just you just gotta have your eyes and ears open. Keep everything that's on your chart is a tool. So just view things like that. With the scope on the view, you're viewing your chart is every possible metric that's shown on your chart is telling you something, and it's up to you to put that information together and draw conclusions from it. So, like, let's say if we took out the whole moving average, I'm going to turn the whole line off. So I think I'll still have the signals, but not the line. Excuse me. Yeah, so now all we have is VWAP. We don't have the whole moving average line, but we know when it turns red and green based on the labels. So just picture a line following these labels, but the line is actually not there. So what if we threw in you guys know me, I like the 9 EMA. I like to make it blue. Did I not add it? There we go. It'll default as blue. And you can get creative with this way too. This is just to show you there's so many ways. How about we go short every time our 9 EMA crosses below the Chande VWAP. Cross below, we would go short, sells off. Cross above, sells up, or pushes up. Stays above, gets the cross, we go short. Gets the cross above here, we go long. So there's just so many things you can do. Doesn't have to be Chande VWAP. It doesn't have to be the 9 EMA, but just get creative. Get moving. I mean, the ATR is an amazing tool, and it's still by far my favorite. But I just want to remind everybody that you know with these grayed out right here on um, the 18th of this year of January, these technically don't fit the strategy because the DMI has to be trending either up or down. So, but we still show them because otherwise you would get one signal a day, and that's, not very cohesive to most people. You want a few trades, you don't want to just rely on one and done and that's it. Um, so there are, it's not always going to be right. I'm just saying, just get creative, see what you can come up with in addition to the ATR. The whole moving average has long and short signals. So what you could do is do like a 3-point factor system. I'm actually looking down at my whiteboard. I wrote that down the other night. So what you could do is, let's take away the 9. Is you want 3 points to line up. So we want, oh, you know what? Let's do the hull and not the Chande. I believe that's it. So we'll want the line to be blue or a long signal whenever there's a buy signal in ATR. So we got a long signal here. Now we just wait for our second point, which would be ATR. We got buy, we buy it. We got a short signal here in our hull. Now we'd wait for our second one, which is ATR. So we would put it, but it's a dud. They happen. Long signal, wait for the ATR. Got it here. Boom. Short signal, again, ATR, another dud, but um, or something like that. That was just something I literally just came up with the top of my head. I mean, I was doing 3 factors because I was using um, the VWAP I had up earlier. I may have been using a different moving average, but so this long and short signals are not the line that's showing up. The line that's showing up is the VWAP. We have removed this other line. You know what? Let's just bring it back. I removed it because I don't like so many lines, but for better demonstration purposes. So 3-point system. We need um, the Chande VWAP and the whole moving average to match, and then the ATR signal. So it'll be 3 points. We get 1, it's long. 2, ATR signal, which is long. That's 2 points. Then the Chande VWAP turns green. That's 3. So we would take it. Um, Up here, we have a short signal. We have a sell signal. That's 2 points. And third, a red Chande VWAP. But again, trade didn't work out. But this was a very choppy day. Long signal, buy signal, green Chande, we take it. We can see over here, um, we got a long signal here. We got a buy signal, but guess what? Our Chande is still red, so we didn't get that 3-point system. And it goes down, kind of bounces all around, hits green here, so you're still in that bullish context. Maybe you would take the trade there, um, something like that. Again, that's not like a bulletproof strategy. I'm just spitballing here just to show you that there's these are amazing studies we have out on this Discord from from 24 different authors of all different backgrounds and styles and strategies. So play around with it. Get creative, and let me know if you have any questions.